Welcome back everybody to the Nomad Hedge. In today's video we will be analyzing the chart of Bitcoin, and we're also going to throw in some macro. So I believe this is going to be a very centric Bitcoin analysis video. If you haven't already, consider liking and subscribing, and let's get into the video. So let's start off with the monthly chart. And as we can see here, this trend line here has acted as resistance for a very long time. And we're not surprised here for Bitcoin to see some distribution right at this level. And we're basically going to need this before we make the next thrust to be able to make this move here towards new all-time highs and breaking above this long-term trend line. So it's very key here to analyze what's happening beneath the surface here. And with that, let's take a look at the weekly chart. And what I think it's important also to highlight is that we are currently within this trend here. Okay, and the reason why I want to make this video today is because we are right at this level right here. So Bitcoin is hovering right at this 55 EMA. Okay, so it's been respecting the 55 EMA ever since we bounced here back in, I believe that was in August 2024. Then we made another distribution here and we bounced out of the 55 again. So you can see that the 55 is a very important level. And if we're breaking the 55, it means that the next level of support is likely going to be the 89 or the 144. Now, we don't want to break the April lows here. And the reason we don't want to do that is because it would invalidate our primary view. And what's our primary view? Well, our primary view is that Bitcoin has already finalized 5 waves here. And so currently we are within this primary wave 1, 2. And you might be saying, okay, well, what about this move here? Well, it's setting the stage for Bitcoin to launch another subwave here. And that's going to give us that thrust to break towards new all-time highs and eventually also break above this long-term trend line that we've seen since 2018. So it's going to be very historic. Now, when we take a look at the monthly chart here, and then we switch back to the weekly again, the 55 is either going to be respected, or we might get a chance here to be able to buy Bitcoin here even lower or add to our current positions. Now, what I think is important is that previously, when you take a look at the prior support here, we can see that Bitcoin found support above wave 3. Okay, so former resistance is now support. But more recently, you can see that Bitcoin has not respected the former prior highs here. So what this could actually suggest is that either wave 5 of intermediate degree ended here, or it ended right here. So that is why we critically analyze the 55 EMA here. And if that were to hold, that means that this trend here is going to continue higher. If not, and if we were to break below the April lows here, it would completely invalidate this primary wave 1, 2. Now, I'm going to explain a little bit further what that means. It means that if wave 5 would have concluded right here, we could be looking into correcting this entire move here that started back in 2022. So that could give us potentially a 30, to 40% drawdown. These extreme drawdowns, like we saw here, like we saw here back in the days, these corrections here, they're nothing in comparison. And so that is why there are certain levels here that we have to watch in order to indicate if we're going to get that strong drawdown or if Bitcoin is setting up for something that's going to push us much higher. All right, so if we move on to a daily chart here, and to see where we currently are in this market. Now, from a risk-reward standpoint, this is a very interesting level. We are right at the former support here. So this is an area where Bitcoin has tested, and now we are seeing if this could act as support. Now, because I'm an Elliottian, and I use Elliott Wave to gauge the psychology of the market, when I take a look at this drawdown here, I could make the case that this is in a wave A. What comes after wave A? Well, you have wave B right there. So we're anticipating a move towards wave C. Now, in order to gauge or measure where wave C ends, it typically ends at the 100% extension. And what is the 100% extension from this level here? Well, it's the same length as wave A. So that means that Bitcoin would need to correct further to complete wave C before potentially moving higher. Now, if we take a look at these levels here, what do we have? Well, we do have the 0.618 retracement level, and we do have the 100% extension. We also have a CME gap that we haven't closed ever since April here. Okay, so this is also a very strong gap here. We call these fair value gaps, and they introduce some, imbalances in the market, and price can, and more often they tend to gravitate towards these levels. So either Bitcoin is going to find support here and rally, or we could see further drawdown to the 100% extension. Now, we always like to buy low from critical areas, and this is a critical area right here. Even if Bitcoin would not respect the lows here, we still believe that this is a great risk reward area to enter long, right? Because we've seen these huge drawdowns here, and despite the fact that we're not at this 100% extension, Bitcoin can still bottom at these levels. Now, you might be wondering, okay, what is this moving average here? Well, this is the anchored VWAP right here, and this is the 0.618 of the standard deviation. Okay, so I use the 0.618 standard deviation, and we can see here that Bitcoin has found support at this level. So if we were to actually enter long here, and Bitcoin all of a sudden would break this level, then we know that the next level of support would be this area here. This would be our pivot. And when we say pivot, that means that any break below lower here, then we have to be very cautious and look towards potentially that 30 to 40% drawdown. Okay. And that could justify Bitcoin to have concluded wave 5 here of intermediate degree rather than being right here at this level. So that would basically invalidate this wave count here, because wave 5 would have been 1, 2, 3, 4, 5. It would have been right here. And both of these scenarios are correct. And the reason why we believe this is the conclusion of wave 5 of intermediate degree, it aligns well with the general indices. When you take a look at the S&P 500 and the NASDAQ, etc., it would suggest that this is a strong candidate for concluding wave 5 intermediate degree, and that we have started a new primary wave. And so these are basically the levels here that we want to watch. And if we're breaking below 91,500, we want to be cautious, and we want to signal some alarm bells that Bitcoin could actually break below the April's lows here. Okay. We're going to be taking a look at some of the macros and see what the on-chain data is telling us about the current state of the price of Bitcoin, and if that could also coincide with if Bitcoin has actually bottomed right here, or if we could see further downside in the market. Okay, so let's begin by taking a look at the Glassnode chart here. And this is a capitulation metric that they use, and they're looking at the current price of Bitcoin here. So we can see a recent spike here. And what they're suggesting is that Bitcoin has triggered a capitulation, okay, especially among short-term holders. And we have seen these spikes here during past market corrections or bottoms, such as the $50,000, which we saw right here, and the state where Bitcoin hit around 75,000, which was right here. So you can see these red spikes here. And now we're seeing this kind of spike again. So what Glassnode is saying is that because of the spike here, we could see a local bottom here for Bitcoin, where we have weaker hands, they're being flushed out, and then you have long-term holders, they continue to accumulate, right? So you see these flash drawdowns, these huge liquidations, and that's typically when you see these large wicks in the markets. We've seen these across the board. If you take a look at the altcoin market, take a look at Internet Computer, for instance. You saw that huge wick, they bought at the bottom, and then now all of a sudden, we're seeing these 300% gains in just a matter of a month. Okay, so that could signal a bottom for the market. And so we've also seen stable coin liquidity. It's been rising. And we've also seen selling pressure also subsiding, especially at these levels here. So we looked at the price for Bitcoin currently, right, at that anchored VWAP, the standard deviation of 0.618. That could suggest that Bitcoin could have bottomed right here. Okay, so it's aligning also with these levels that we're watching. Now, if we move on to the next chart, we do have a chart here from CryptoQuant. And what this is showing us is the Bitcoin MV/RV ratio. Okay, so this is the market value to realized value ratio, and this is on metric. And so we can see here that this ratio here has dropped to the lowest level since April 2025 to around 1.8. And so what does this mean? Well, it means it's entering an accumulation zone, okay? Because it has approached the investor's average cost basis. And historically, this range, it has marked midterm bottoms. So when Bitcoin rebounded about 50% from the 75,000 area to 112,000, that's basically when we saw the same kind of ratio at 1.8, and that gave us that 50% rise. So if this pattern holds right here, according to CryptoQuant, we're looking at a recovery to around 150,000 for BTC. 150,000. And that's pretty huge. So we are currently at these levels where probably nobody wants to buy Bitcoin. We have seen a few altcoins making rapid moves, okay? They flush the market, they accumulated, and then prices spike. That's exactly where the strong hands takes over the weaker hands. So this is a chart here from Wintermute, and ever since early 2024, okay, right here, we saw that crypto liquidity expanded from 180 to 560 billion, okay? So that gave us that thrust above $100,000. Okay, so we saw growth everywhere. We saw growth in stable coins, we saw the ETFs, and we saw also asset tokens. Everything was growing here. And if you're wondering what digital assets tokens are, they are tokenized securities, basically. When we look at the current state here, right here, okay, what are we seeing? Well, we're seeing that this growth trajectory has stalled, or it has flattened, both. And that's what you're seeing basically on this chart here. So what they're also saying is that capital is mostly rotating within existing markets, right? So you have short-term selling and then it bounces up, and that's basically what's happening because there is no growth. It's just flat right here. That also means that new money isn't coming in. We're seeing basically money just staying around this level. When that happens, typically, that's when you have these shorter rallies and the market becomes very uncertain, and you also have narrower market participation. So that's basically what this chart is saying here, that there is no growth in liquidity. We have flattened right here. So either liquidity is going to drain here, and that's going to give us that 30 to 40% drawdown, or we're going to see, what are we seeing here? Well, potentially accumulation, or we're seeing distribution. That is why we've highlighted these key areas in the market in the price chart for you to watch and to make decisions where you want to be in the market and be out of the market. So right here, we're saying that this is a great risk reward. If you were to be stopped out here, your next level would be the 100% extension right at this 0.618 retracement level. Why is this a key area? Well, it's a key area because we do have a CME gap right here, and we also have a fair value gap. So the market is or can gravitate towards this area. And we're also going to be taking a look at the liquidation heat map right here. And we can see that we're seeing basically a battle here between the short sellers right there. And we also have the leveraged long positions right there. So the market could still make the case for another push down here towards that $90,000 level. And that is why it's also important to gauge here the sentiment of the leveraged positions, because the market is either going to knock you out either one of these at some point. What do we do from here? Well, we watch these levels right here. If we break the 100,000 again, we're going to watch these levels here. And this level is around $92,000 to $91,500. So this is basically how we view the crypto market and Bitcoin for that matter. And we think that this could be a very strong area of support here. If we were to hold this one, we're looking towards new all-time highs. Are we going to be bullish or bearish? Well, both, right? So because we know our risk reward, we know where the market's going to say goodbye or it's going to take off. And that is why we look at the technicals and we're gauging this thing on a day-to-day basis. If you haven't already, you can subscribe to my channel. You can also follow me on X. It's at Nomad Hedge. I'll keep you guys updated and I'll see you guys in the next video. Have a great rest of your day.